Have you ever wondered how to start day trading? Well, you're in the right place. Day trading is a unique form of financial engagement where buying and selling of financial instruments take place within the same trading day. The goal is to close all positions by the end of the day to avoid unmanageable risks and potential negative price gaps from one day's close to the next day's open. It's a strategy that can be applied across various markets and instruments, each with its own unique characteristics and risks. You might choose to trade in the stock market, or perhaps the forex market piques your interest. Futures and options are also viable avenues for day trading. In essence, day trading is a dynamic, fast-paced world that requires a keen eye, quick decision-making, and a robust understanding of financial markets. Now that we've laid down what day trading is all about, let's dive into how you can get started. So, you're interested in day trading, but where do you begin? Well, the first step is education. Understanding the basics of the market, trading strategies, technical analysis, and risk management is absolutely crucial. You wouldn't jump into a pool without knowing how to swim, right? The same principle applies here. Next, you need to choose a broker. This decision shouldn't be taken lightly. You should consider factors such as fees, platform features, tools, and whether they comply with regulations. Think of it as choosing a partner for your trading journey. Now let's talk about the trading platform and tools. It's like your cockpit. You need to know what every button does. Familiarize yourself with analytical tools, charts, and real-time data feeds. When it comes to capital requirements, remember the golden rule. Only trade with money you can afford to lose. Determine the minimum capital required to start, but be cautious. Lastly, practice makes perfect. So, before you dive in, practice with paper trading or simulated environments. It's like a rehearsal before the grand performance. Once you've got the basics down, it's time to develop your strategy. A successful day trader needs a solid strategy, but how do you create one? Well, strategy development in day trading is a fourfold process, starting with technical analysis. This involves studying chart patterns and using indicators like moving averages, the relative strength index, and Bollinger Bands. These tools reveal market trends and volatility, helping you pinpoint potential entry and exit points for trades. Next up is risk management. It's crucial to set stop-loss orders and understand position sizing. Remember, never risk more than a small percentage of your capital on a single trade. A loss can be a hard pill to swallow, but it's better to live to trade another day. Thirdly, maintaining emotional control is key. Impulsive decisions can lead to disastrous trades. Always stick to your trading plan no matter what. Finally, remember that markets evolve. Continuous learning and adaptation are essential to stay ahead. With a strategy in place, you're ready to trade. But first, let's talk about some practical considerations. Before you start trading, you need to understand the legal and tax implications. Day trading isn't a lawless frontier. It's governed by specific regulations that vary by region. These rules could dictate how much capital you need to start trading, how many trades you can make per week, and more. Therefore, it's crucial to familiarize yourself with these regulations to ensure your trading activities are above board. Now, let's talk taxes. Any gains you make from day trading are subject to taxation. The rate at which these gains are taxed can depend on several factors, such as your overall income and where you live. On the flip side, if you make a loss, you might be able to deduct it from your taxable income. Remember, tax laws can be complex, so it's often a good idea to consult with a tax professional. Now that we've covered the legal and tax aspects, let's move on to some practical tips. Here are some practical tips to help you on your day trading journey. Start small. It's wise to begin with a modest amount of capital, and gradually increase as your confidence and experience grow. Choose your market wisely. Focus your energy on markets that you understand well. This familiarity can provide a significant edge. Set realistic goals. Having clear, achievable targets for profit and loss can prevent frustration and impulsive decisions. Keep detailed records. A meticulous log of your trades can be invaluable for analysis and tax purposes. Avoid common pitfalls. Overtrading or trading too frequently can lead to exorbitant fees and hasty decision-making. Undercapitalization or starting with insufficient capital can hamstring your ability to manage risks effectively. Lastly, never underestimate the power of news and economic events. Stay informed about developments that could impact your chosen markets. Remember, day trading requires a blend of knowledge, strategy, discipline, and continuous learning. It's not for everyone and involves considerable risk. But with proper education, risk management, and a realistic approach, you can set yourself up for success.